Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, April 26th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. The previous session seen an expansion day down within the range for the ES as price went down to hit the 4100 edge and even a bit lower. The day's range was a high range day, or higher than average here, about 150% of average range, which is a decent sized day if you're looking to initiate a new breakdown and move. Very similar to the size of this day back here that initiated the initial decline to the edge and through that edge. So this could be a very similar outcome here. You'll notice that after this day over here, we had a little bit of a hold session there before it continued through there. Again, not likely to be exactly the same here, but right now we're seeing a bit of a hold at the moment. Not quite an inside day. It barely tapped the previous session's low, bounced, and now we have a bit of a digestive day here developing at the moment with a downward bias that's been clearly in effect since last week. Failed new high here, a rejection for all intents and purposes, as we mentioned, at the edge at 4200 here. And we've had lower highs and lower lows day over day here and are continuing that streak here today. So it has been bearish within the range. Now, can it break down and push back toward the bottom of the larger range? This is the larger range right here that we've had in play. We've had this range develop. We've had this rejection, which has taken us downward. Are we about to embark on that move yet again? So today is about bears looking to defend morning strength, keeping price below the previous session's midpoint, or at least rejecting that by the end of the day. Perhaps in the best case scenario for bears, you get an inverted check mark day down. But even a whole day can build energy for a continuation down tomorrow. Tomorrow could be a failed new high with a continuation down. We also have GDP 1 hour prior to the RTH open Thursday morning, so that could add fuel to the fire there. So right now, looking to see if we make a further move to the downside. Do we bounce a bit more and then continue? How's that going to play out? Still mostly in the range, not yet broken out completely yet, but we could see that continue to be the case here up ahead, where we build into this range just a little bit longer before we break and really get going. So looking for an inverted checkmark day today, or at the very least a digestive day with a downward bias with a shot to begin to really see expansion up ahead. If we take a look here at the NQ, this one had a much deeper move in the previous session. Finally got to about 125% of ADR, a stop run through the edge. We have very clear levels here that we've been following. Remember the FOMC key level from March right here, that's 12,925. We also have the top of the key range right here, which we have adjusted to be 12,945 and a quarter, and that level right there, those two levels, very, very important. To fail through those levels would open up a return back toward 12K below. So again, watching for further failure. You can see how deep price got below that 4-week range right here. Today, bears looking to defend morning strength. Ideally, you're looking in any pullback, even perhaps as high as the 8-period average, could be sold for a continuation down. Tomorrow, even if today becomes a digestive day, tomorrow could be a failed new high outside day down with a continuation up ahead. Now, can this be a buying opportunity for a slingshot move higher? Of course, but we need a better bullish rejection. Right now, everything flowing to the downside, at least in the short term. All right, take a look here at crude oil. Now, crude is down to 76.50 right here. We mentioned before the break at 82, 81.5 was going to open up 79 and 75.70. 75.70 is still left to go be tested. On this move here, we mentioned here the downtrend that's still in play and the likely continuation toward that gap fill. So far today, early strength has been rejected. A great higher high fade in pre-market trading over there, and now inverted check mark day down with a likely continuation toward that gap fill. We're at 76.50 right now. We got 75.70 down below. That's not too far off. We're only at 79% of average range here today, so we still have more to fulfill that 100% target and perhaps more. So looking for a continuation down toward that 75.70 here today and into the coming days. If we take a look here at gold futures, gold is up 0.25% right now and hanging on to 2,000 barely. Again, good higher high failure here, good weekly bar rejection here. The way it fell back and hasn't been able to reestablish back above 2025, 2030 has been important, but it hasn't really given up 2,000 yet. Hasn't even tested 1960, which is the key level here. Once it falls below 1960, it usually opens the door to much lower levels. It hasn't even tested it. So it's been hanging out up here, doing quite well to at least hold on to the recent move, the recent gains, but again needs above 2030 in order to open it up to the upside. Failure to get back above that level could open up additional selling opportunities for a continuation down. So still watching for this thing to fail, perhaps below 1960 at some point, but we could build out quite a bit more before that happens. Taking a look here at the YM. The YM here had a big day down in the previous session as well. This one right now pulling back right into the previous month's high price, which is held throughout the month, and that was basically the low here today. A little bit of a bounce. You can see a little bit of a tail here developing. This one has been quite a bit more bullish than, say, some of the others here, as it has been working its way higher toward the 34,500 zone. Mentioned before, if we were able to pull back and find a good rejection, we might go finish that move up above. But at the moment, got to keep an eye on 33,800. Any pullback to that zone could offer a short-term opportunity for bears to defend for maybe a return lower into the 33K level below. So right now, watching 33.8 as the short-term area of resistance here for a potential continuation to the downside in the very near term. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.